Welcome to Drill Down Earnings. We have the latest quarterly results from ServiceNow. This is the company that delivers the AI we keep talking about to big corporations. This is the business story behind One Stock on the Move. I'm Cory Johnson, Chief Market Strategist for the Epistrophy Capital Research. And Q3 earnings from ServiceNow. Wall Street likes a beat or a miss, and this was a beat, just barely. $2.75 billion in revenues expected, $2.8 billion delivered. Okay, so we'll call that a beat. The expectations were quite high for this company because Wall Street loves this company. And it did, in fact, beat their guidance, regardless of whatever Wall Street might have been expecting. And they raised their expectations for the year, the next quarter and the year, I should say. Subscription revenues, $2.7 billion, up 23% on a year-over-year basis. Total revenues, as I mentioned, $2.8 billion. That's up 22% on a year-over-year basis. They talk about remaining performance obligations or billings, current remaining RPOs. Those are $9.36 billion. It's a 26% growth. And when you see RPOs growing faster than billings themselves, that's a very positive sign for the near future. Also importantly, the business is getting bigger. They had 15 transactions in the quarter of over $5 million each. That's a 50% increase in those big deals for this company. So subscription revenues up 23%, current RPOs up 26%, total RPOs up 36%, but margins, 31% operating margins, just fantastic here. Now, a year ago, though, the business is growing more slowly, I should say, because a year ago, the business was growing, subscriptions are growing at 27%. Now they're down to 23%, even though 22% was the guidance here. And the RPO growth, as I mentioned, a very impressive thing. It can show that they're getting the billings that are exceeding the business they're delivering now, which locks in a certain amount of growth, I guess. As I mentioned, their margins, not only are their operating margins good at 31%, now it's a non-GAAP number because GAAP doesn't recognize their free cash flow margins as a GAAP number. Nonetheless, free cash flow margins of 17%, really strong for this business in this quarter. So much bigger, it was 9% a year ago. In the third quarter, 17% this quarter, delivering a lot of cash from this business. What are they doing with that cash? Well, one of the things they're doing is hiring. State of employment in America is very good. In technology in San Francisco out here, not so good, but forget that. ServiceNow is hiring like crazy. They've added almost 15% employees in a year, now to 25,743 employees. A lot of those employees in R&D, suggesting they've got a lot more investments to make here. So how did the stock react? Initially, the stock sold off a little bit, but then came back as the conference call initiated for the after-hours trading session, down 1%, but for the year, stock is up 68%. Certainly a positive sign for shareholders there. And again, the guidance coming up from this company, as they're saying, both subscription revenues are going to do better, and for the year, the numbers are going to get better. Why? Well, listen to the enthusiasm we hear from CEO Bill McDermott.
We have a very clear plan here. It's highly thought of by people. We actually participate in building our plans together, and then we over-communicate everything. And then ultimately, the execution really comes down to wanting it more. And if you get 26,000 people that want to win more than anything in their professional careers, you can build a defining enterprise software company of the 21st century. Now, we're not even close to hitting our peak. We're not even near it. So as you think about lapping, ourselves and getting caught up in the hype of our own elite level execution, there's plenty of things we can do better. There's plenty of people that still have to get on the board and get more results. But all those things are in flight. And that gives me such optimism about what we've yet to do as we look into the future. And now to build this unbelievable platform with this net new innovation on top, it's just going to unleash the will of this company in a way that is just super stunning to watch. And I do want to thank my partners out there. They know our word is good, and they want to be part of ServiceNow. And I think Jensen says it best. He says we're the AI operating system for the enterprise.
Kind of few things in the world of technology, but one thing that you certainly can count on is the determination of ServiceNow CEO Bill McDermott. One of my favorites, at least. All right, so what's our big drill on earnings takeaway? What's the one number that tells us a whole lot? So the numbers you want to remember about ServiceNow's Q3 earnings are some important ones. Certainly the revenue number is an important one of $2.8 billion in revenue. But when we look a little bit further, I think the big number that our takeaway should be that big customers are getting bigger, and they've got a lot of them. The average size of a customer that does more than $1 million in business is now, here's your drill down earnings bite, $4.8 million. And they have 2,020 of them, averaging $4.8 million. This is a big business showing companies how to use AI. ServiceNow doing quite well at that. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson.